Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the US Fed is telling markets rate cuts from them are not coming soon. But first up today, the overnight dairy auction confirmed the recent rises, but didn't add to them in a subdued event. US dollar terms, overall prices were up 0.1%. In New Zealand dollar terms, they're up 1.5%. Volumes were seasonally small, however. Perhaps of some concern in this data was that food service components like butter, cheddar and mozzarella all fell by 1.4%, 8.5% and 3.8% respectively. However, given the overall hold, it is unlikely any farm gate payout forecasts will be changed by today's outcomes. US housing starts and new building consents are in the doldrums as this sector continues to fade. But US retail sales rose 4.9% last week in their Red Book tracker, the 10th week in the past 13 that the rise has bested inflation. The retail expansion is embedded there now. Meanwhile, Fed boss Powell has been out speaking, indicating their policy rate will stay elevated for some time yet. They see no pressing need to cut or in fact make any changes. In China, electricity production rose just 2.8% in March from a year ago, a huge retreat from the 8% rise in December. This is an important background data that should be reflected in China's economic activity, in other words, their GDP. But Beijing reported first quarter 2024 GDP rose 5.3%, up from 5.2% in the fourth quarter of last year. And this was despite retail sales rising only 3.1%. And national real estate investment falling 9.5% in official data. While we've raised our eyebrows at how they can deliver a credible GDP result just 16 days after the quarter end, no one else can do that, few of the major components show expansions at the level of the claimed overall growth. And you can draw your own judgments on the credibility of the rise of 5.3% growth in the first quarter. In Europe, the ECB said they will likely cut rates soon. The ECB boss was speaking at the IMF's release of their 2024 growth forecast update, and those revealed that despite gloomy predictions, the global economy remains remarkably resilient, with steady growth and inflation slowing almost as quickly as it rose. And ratings agency Moody's said overnight that New Zealand's sovereign credit rating stays at the current maximum AAA grade. The outlook is stable. They are the only rating agency to assign a AAA grade to New Zealand. The US Treasury 10-year yield is now at 4.66% and up 3 basis points from yesterday. And the price of gold will start today higher by $31 and now at $2,394 an ounce. Despite continuing Middle East tensions and uncertainties, oil prices have remained little changed at just under $85 a barrel in the US, while the international Brent price is also unchanged at $89.50 a barrel. And the Kiwi dollar starts today at just over 58.8 US cents and down 30 basis points from yesterday and a new 5-month low. Against the Aussie, we're firmish at 91.8 Australian cents. Against the euro, we're down another 20 basis points to 55.4 euro cents. That all means our trade-weighted index starts today at just over 68.8 and down 20 basis points and a 10-day low. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.